Good afternoon and welcome to everyone. Thank you for joining us for today's webinar. My name is Ari. I am the Senior Accounting Consultant at Premia TNC Malaysia SD and PhD. It's my pleasure to be here with you today. For today's webinar, we would like to focus on few topics which are related to types of Malaysia business and companies, incorporation of Malaysia company, bank account, opening requirements, and general statutory filing requirement, and annual general meeting. Please note that you may type your questions in the question box on the right column in case you have questions during the presentation. My colleagues will organize all your questions and submit them to me. Submit them now and I shall answer them later during the Q&A session. If by any chance your query is not answered during this session, we'll reply you with our answer via email after this webinar. Now, without further delay, let's start our webinar today. There are many types of companies and businesses in Malaysia. The common ones include sole proprietorship, partnership, private limited company, public limited company, unlimited company, foreign company, and limited liability partnership. In Malaysia, a business may be conducted by an individual operating as a sole proprietor or two or more but not more than 20 persons in partnership or limited liabilities partnership, which is called LLP, or a locally incorporated company or a foreign company registered under provisions of the Companies Act 2016. Choosing from the business entities in Malaysia is an important step during the formation process. Before officially setting up your business, you must decide on the type of the company that is the most suitable for your business objective. Now, let us have a look at the first type of business setup. Sole proprietorship. Sole proprietor is not a legal entity and the business is entirely formed, controlled and managed under an individual who is the owner of the entity. The liability is not limited to the business but extended to the owner as well. Accordingly, any debts, liabilities of the business shall be borne by the owner. Personal income or assets of the owner will not be protected if this business is declared bankrupt or in debt. Business management is purely under the sole owner. The governing law is Registration of Business Act 1956. Only Malaysian citizens and the permanent residents can register this entity. You will have to pay an annual fee to the Companies Commission of Malaysia, known as SSM. To keep the sole proprietorship renewed, the type of entity does not need to submit audit report or carry out any annual filing except annual renewal. Then we move to the second type of business setup is partnership. Partnership can be divided into general partnership and limited liability partnership, which I already mentioned is called LLP. In this slide, we'll first look into the general partnership. The limited liability partnership will be explained later part of this. General partnership is not a legal entity. Generally, it consists of 2 to 20 individuals. The governing law of the general partnership is Partnership Act 1961, or partners can come up with their self-created partnership agreement. The management of the partnership is handled by the partners, and these partnership agreements shall outline the responsibilities and the liabilities of each partner. These partners combine their resources to carry out business with the goal of generating profit. There is no limit in the liability of general partnership, just like sole proprietorship. Thus, the business partners share the profit and liabilities of the partnership. The partnership is not required to pay any tax but the partner will be taxed as individuals under personal income tax and have their profits or loss from the partnership. Similar to the sole, only Malaysian citizens and permanent residents are allowed to register for partnerships. Now that we had discussed two types of business setup earlier, and now we come to the third type of business setup, which is a company. There are few types of companies which include private limited company or SDN PhD, public limited company which shortly PhD, unlimited company SDN, and foreign company. A private limited company, Sandarian Berhad or SDN PhD, is a separate legal entity from its owner, meaning that the owners are liable only to the amount they have contributed to the company, and their personal assets or wealth will be left untouched if something happens to the company. The type of company can buy or sell property, enter legal contracts, and sue or get sued in the court. The private limited company is the most common type of entity for foreign investors. Foreigners are permitted to own 100% of the company. However, for some industries, there will be 50% Malaysian ownership. These industries include agriculture, banking, education, oil and gas. The shares of this type of entity can be issued to the individual or corporate bodies, with a minimum of 1 member and a maximum of 50 members. As for public company, the number of shareholders is usually more than 50. A public limited company is somehow similar to the private limited company, but the shares of the public limited company can be offered to the public. This entity must have a minimum of 2 shareholders and the number of members is unlimited. The public limited company annual general meeting and make reports on their financial statements. If the public company is listed on the stock exchange, then it will be governed by the Securities Commission of Malaysia. There are 2 types of public limited companies in Malaysia: limited by shares and limited by guarantee. As for companies limited by shares, the liability of the members of this entity is limited to the amount contributed on their unpaid shares. Company limited by guarantee, where profits gained from the company will not be distributed to the members of the company. However, the profits will be reinvested into the company, mostly used for non-profit business like community, charitable trust organizations. So unlimited companies are not different from the sole proprietorship and partnership business entities. The only difference is that they have a special article of association and are free to return its members. Next, we move to the foreign companies. A foreign entities can be either set up a representative office or register a foreign branch in Malaysia. Representative office is a non-trading entity that allows foreign-based companies to have a presence in Malaysia for a period of 1 to 2 years to explore business opportunities within the country. Foreign companies that want to increase their market understanding of the Malaysian business environment can set up a representative office. A representative office cannot engage in any sort of business activities that will generate profit, sign any deals, or undertake any trading activities. While foreign branch office is an extension of the foreign parent company, the foreign parent company is liable and responsible for all the debts of the branch in Malaysia. The activities of branch office must be the same as foreign parent company. There must be at least one person residing in Malaysia to act as branch's authorized agent. The branch must also register with SSL before being incorporated in Malaysia. So now both types of entities, representative office and foreign branches, do not have a legal standing in Malaysia. Thus, any debt, liabilities of both entities shall be held responsible by the parent company. Now we will go through the limited liability partnership. A limited liability partnership combines the characteristics of a partnership and a company. It is a body corporate and is a separate legal entity from its partners. A limited partnership provides asset protection to its partner if the partnership goes bankrupt or indebted. The aim was for professionals such as lawyers or accountants to carry out the professional practice. So, limited liability partnership is governed by the Limited Liability Partnership Act of 2012. It is important that you understand the differences of the business structure in Malaysia, because choosing the wrong entity could lead to problems occurring in the future. You should choose the type of business that best matches with your company's objective, numbers of officers, and industry. Now we go through the process of the incorporation of companies in Malaysia. There are two stages of incorporating a company in Malaysia: pre-incorporation stage and post-incorporation stage. The pre-incorporation stage is where the process of name search is done to see the desired availability of the name. If the name already exists, you will need to change it, and if it is too similar to another existing company, you may want to consider changing it too, because you do not want to create confusion among your clients. There is also a risk that your company name may not be getting approval if a similar name already exists or in use. Only when the name is approved by SSM, then can proceed to incorporate the company. In order to incorporate a company, the information documents required to provide to the registrar are as follows. The first is the proposed company name. Second, either a private or public company, proposed business type, registered office address, business address, paid up capital, which could be minimum 1 ringgit, details of directors, promoters, and share, declaration from directors and promoters, declaration of compliance from individuals responsible for incorporation, and any other additional documents might be necessary. This information, once completed, shall be logged online to the SSM and depends on SSM's approval on whether to approve, reject, or do further query on the application. Once approved, a certificate of registration will be issued by the SSM. In the post-incorporation stage, once the company has been incorporated, a notice of registration, Section 15, will be sent via email, and a 12-digit unique registration number will be assigned to the newly incorporated company. Before commencing operation, kindly obtain the necessary license, permit from the relevant authorities. Please note, all companies in Malaysia appoint a company secretary, who ordinarily has a principal place of residence in Malaysia, and this has to be done within the 30 days of incorporation. He or she must be either a licensed person by the SSM or a member of a professional organization prescribed by the Ministry of Domestic Trade and Consumer Affairs. Subsequently, to submit audited finance statement within 18 months from the date of incorporation, and in the next subsequent year, 6 months from FY. Corporate bank account in Malaysia are also known as a current account, and these accounts offer special facilities that other bank accounts do not. Some of the facilities include foreign banking, issuing checks, and Malaysia has tightened its anti-money laundering and terrorism financing rules, which banks may be more cautious when opening an account for foreigners. Banks will conduct consumer due diligence on potential customers before opening a new business account. This process includes identifying the customer and verifying that the customer is using reliable documents, data and information. Identifying the identity and verifying the person acting on behalf of the customer is authorized. Identifying and verifying the identity of the beneficial owner using relevant information or data from reliable sources so that the bank knows who beneficial owner is. And understanding and obtaining information on the purpose and intended nature of business relationship. You may be considered as a high-risk customer if you are a non-resident customer from country, unregulated industries, politically exposed person, or from countries with weak anti-money laundering and combating the financing of terrorism laws and regulations, such as non-cooperative countries and territories, which we call NCCT. You may refer to this slide for the basic requirements or the documentation for opening the bank accounts. The process of opening a corporate bank account in Malaysia is relatively straightforward once you have all documents and bank requirements prepared. Opening an account in Malaysia could take a couple of weeks depending on the bank and how much investigation the bank must carry out. The process might take even longer if you are not physically present in Malaysia during opening the account. Therefore, we recommend you to be present in Malaysia while opening the bank account in Malaysia. Next, we move to the general statutory filing requirement. The companies must submit an annual report, or in short we say AR, for each calendar year to SSM. It is due within 30 days from the anniversary of its registration or incorporation date in Malaysia. A company and every officers who contravenes this section commit an offence according to the law. If a company fails to lodge an annual return for 3 or more consecutive years, the registrar may strike a company off the register. In accordance with Section 248, subsection 1, Section 257, Clause 1, and Section 259 of the Companies Act of the company directors shall prepare and circulate the financial statement to its members within 18 months from the date of the company's incorporation and subsequently within 6 months of its financial year ends. Finally, let's touch on the annual general meeting. The annual general meeting, AGM, is held to have an interaction between the management and the shareholders of the company. The CA 1965 previously required a company, whether it's private or public, to hold an annual general meeting AGM every calendar year and not more than 15 months after the holding of the last preceding AGM. Recognizing the fact that it may be a burdensome and costly for private companies to hold AGMs, especially those that are closely held by few members or run as a family company. The new Act has removed this requirement for private companies. Now only public companies need to hold AGM under Company Act 2016. How will this abolishment impact the operation of the private companies? The abolition of AGM will mean that the election of auditors and the retirement of directors, the tabling of audited financial statement, and lodgement of annual return will be dealt separately and not tied to the holding of an AGM for private companies. Members will still have a right to receive an audited financial statement, although they do not have the benefit of the forum of general meeting to discuss and question the directors on such statement. So our presentation is almost at the end. So we hope the information provided in last minutes regarding the business realities in Malaysia is helpful for you. Now let us move to the Q&A session. Okay, the question I got is, how long does it take to incorporate a private limited company in Malaysia? Based on our past experience dealing with SSM, the entire incorporation process will take around 5 to 10 working days from the day the client return the incorporation form with necessary information and documents to us. Please do know that the incorporation timelines is very dependent on the accuracy and the completeness of information and documents, and also subject to the availability and stability of SSM's ICYPD system, online system. So this one was the answer. Now we will attend for the live question. Okay, the first question I have received is, after incorporated the company, do I need to visit Malaysia to renew the company for the upcoming or the continuous years? The answer is, you are not required to come to Malaysia for your company renewal. The annual return filing can be done by the local company secretary, hence physical visit is not required in this regard. Okay, the second question that is received, when should we commence our first annual general meeting after the setup? The answer is, the Companies Act 2016 has stated that only a company is required to hold an annual general meeting. The first annual general meeting within 18 months of its incorporation. Subsequently, should be within 6 months of the company's financial year end and not more than 15 months after the last preceding annual general meeting have taken place. Now, we have received our third question also. For company incorporation and bank account opening in Malaysia, do I need to come and visit Malaysia? Okay, we can incorporate your company online and does not require you to be physically present here. However, for bank account opening, generally the banks request to see their customers face to face. Some of the banks in Malaysia do also provide an alternative solution that does not require your physical presence in Malaysia. So you are welcome to contact us in future if you have any further queries in the process. You're most welcome to reply. Okay, this we are at the end of our webinar. We hope that you have benefited from this webinar, and we have tried our best to give you the possible solutions. And feel free to contact us if you have any other questions. Premia TNC's headquarters is located at Hong Kong. Besides Malaysia, we also have an office located in Singapore, Taiwan, Vietnam, and South Korea. If you are interested to know more about these jurisdictions, please check our future webinars. And thank you for your precious times. And we hope to see you again at the next webinar. Goodbye and have a good day.